In this video, I'm going to be discussing three different types of accounts that you might need to have if you really want to take this forex trading like a real business. This is important so that you can really have a consciousness or a relaxed consciousness that quite a number of things in your finance is under control. What do I mean by that? By the time I'm done explaining these three types of accounts, you will understand what I mean by having consciousness that your finance is under control. The first type of account that an average forex trader should have is what I call basic account. You see, this basic account is an account that we designate for consumption. This is an account that you trade, you put, maybe let's say you have $10,000 that you want to trade with, just as an example. You divide the $10,000 into three. You have 20% of that $10,000 should go into this basic account. What do you do with this basic account? This is an account that you expect that whatever you make in terms of profit or return on your trade or investment from this basic account is what you will use for maybe for food, for maybe transportation, or to fuel your car, or to maintain something, with any expenditure within a month, within 2 months. This is the account that you will be expecting that whatever you make out of this account is what you will use to cater for those needs. This is very crucial, and you as a forex trader, you need to take cognizance of an account like this, because obviously the reason why so many people struggle in the forex market is because they load almost all their expenses, almost all their life challenges in terms of finance on one account. So that pressure makes them to trade their account such that at the end of the day, it's either they are not profitable consistently or they are blowing their account. So the first type of account you need to have as a forex trader is basic account. Like I said, let 20% of your entire capital go into this account. In fact, at PMI, our basic account is the type of account where we pick what I call within 24 hours trades, and is because we trade in wave in PMI, at PMI rather. For the basic account, we trade 4 hours wave. In fact, 4 hours third wave. There is a way. This is not the video where I'm going to explain in details what that means, but this basic account, this is where we pick within 24 hours trade, and we take profit of ratio 1 to 3. You risk 1 to make 3. For instance, you risk $10 to make $30. This is a basic account, and this account is very important for an average forex trader, because at the end of the day, if you know that maybe your feeding expenses is catered for, maybe your transportation is catered for, and maybe clothing here and there is catered for, domestic expenses is catered for, there's a way you will now be able to trade these other two accounts that I'm going to mention. Now, this basic account is very crucial, and this basic account is where you pick, maybe, in fact, for people that really like flipping, if you want to do any type of flipping, you can now flip with this basic account, because this is the account you are expected to make whatever percentage of profit within the shorter period of time. Of course, now in this account, you might now need to probably now use aggressive risk management model or recommended risk management model. Aggressive in the sense that you might need to use maybe 5% of your account. That is if your risk tolerance permits that, or you use 2% of your of that 20% that you have loaded in the basic account. Now, the second account that you are to have is what I call investment account. In fact, this is what we publicize in our trading system. This investment account is where you are expected to pick trade that has duration of within a week or within a month. Now, in this trading account, we advise that you use maybe 30% of your trading capital. You have divided your trading capital, let's say $10,000. Now you have divided it into 3. You have 20% goes for the basic account, maybe $2,000. 30%, which is $3,000 for the hypothetical example we are using, goes into your investment account. This investment account is what you trade within a week. So you are to pick trades on daily waves or weekly waves. So if you pick a trade on daily waves, it is expected that within a week this trade will mature or take profit. Is going to, if it's a profitable or a trade that goes in profit, and of course if it's a losing trade, of course it will lose within a week. Now if it's a weekly wave, it is expected that this trade will take profit within a month. Now, this investment account, we usually look for risk to reward of 1 to 6. I'm using PMI structure of trading as an example now. Of course, whatever trading system you use, you can apply this to your trading system. You have a basic account where you take trades maybe within 24 hours or within 2 days max, where you can just take ratio 1 to 3 or in terms of risk to reward. This basic account is for consumption and daily runnings or whatever, fueling and all of that. This investment account now is what you are expected to say, okay, I have an expenses for the next 3 months. I have an expenses for the next 5 months. Let me put this money into this investment account. By the time I'm able to now trade this within 3 to 4 months or 6 months, I should have return on investment from this 30% of my entire capital. And this particular profit is what you now use to cater for expenses that might be around, maybe school fees or something, or house rent or something like that, depending on where you are, your location. Now, the third account is what I call project account. Now, the reason why having this different account is important is so that you can really be relaxed as a forex trader. The market is filled with a lot of uncertainty. Now, if you now load all your financial burden on one account, you will be frustrated. So, after you have basic accounts, which 20% of your total capital goes into, you have investment account, which 30% goes into, or maybe 40% goes into. The last account will now be the project account. Now, this project account is going to be specifically for a particular project. Maybe you want to do a particular housing project now. You now load 40% of your remaining the remaining 40% of your capital, or 50%. That is if you use 30% for investment account. The remaining 50% or 40%, you can load it there. Now, the expectation for this project account is that you are going to trade this account towards that particular project. Now, at PMI, what we do for project account is that we pick trade for monthly waves. We only take trades on monthly wave for project account. And for monthly waves, we take trade that gives us risk to reward of 1 to 20. Let me repeat that. For project account, you load the remaining 50% of your capital into the project account, and the 40% that is remaining. The essence for that project account is you will identify a particular project that you want to do probably in the next 12 months, in the next 9 months. Now, you now want to trade this account towards that particular project. Now, this is not necessarily going to be for something you want to consume, and of course, you are not expecting to maybe cash out from this account within 2 months, within 3 weeks, because you already have basic and investment accounts that will cater for all those expenses. Now, if you have a project let's say you now load the remaining maybe $5,000 into that account, for instance. You are going to trade that particular money towards that project, and it's going to lapse within maybe probably 9 months or 12 months. That's how we take trade. In fact, at PMI, when we take trades on the project account, an average trade takes 3 months before you can take profit. Between 3 months, it might take profit within 1.5 months, within 2 months, or within 2.5 months, but maximum of 3 months it will take profit. So, and we take profit of ratio 1 to 20. I'm just using PMI's trading structure as an example now. So such an account, in fact, we advise people to trade 5% on such an account. Yes, I know that that is aggressive, but because for that particular trade, the risk to reward is very huge. Number one, there is no how you will lose money for that project account. And because each trade you win is going to give you ratio 1 to 20. So we advise that you trade, because we already know that you want to use this money for a big project now. We advise that you trade 5% of that account, which means you will trade the whole account you trade one cluster with the whole account, because 5% means that you will take 20 trades with the account. So within that 12 months, you would have been able to take maybe on the average of 5 to 6 trades within 12 months. And each trade that ended up as a winning trade is going to give you ratio 1 to 20. What that means is that if you are risking $10 on a trade for the account that you have loaded, if you have a winning trade within that 3 months, it's going to give you $200. $10 will give you $200. Now, let's say that, of course, you have losing trades, but whatever losing trade you have on that project account, one trade or two trade is going to cover for the losses, and you will now have massive profit. The only difference is that this project account is going to be left untouched for 9 to 12 months. This is how we trade at PMI, but in your own case, whatever system you use, just try to have these 3 different types of accounts, such that when you are trading on the basic account, you are not troubled as to probably the project that is ongoing. You do not load your money into the basic account to trade as if you are trading for the project, or you are not trading with the mindset of you want to pay your children's school fees and you are in a rush, because you have the investment account catering for that. So if you can departmentalize your capital or put it into different accounts, this is going to really help you to trade at a relaxed level. I want you to really give this a consideration, because it's going to help your trading journey a lot. And of course, this channel, I'm going to be picking examples of trades, because for some people, I said project account, you are going to pick ratio 1 to 20. It doesn't make sense. Of course, you will see examples of trades that will pick. If I will pick the trade live, you will see the way it will run. We'll leave it for 3 months. You will see when it catches out, we are going to come and update you on this same channel, because that's how we trade. So I want you to stay glued to this channel. Of course, you'll be getting a lot of value from here.